in terms of this kind of thing, you've been on many podcasts before?
I've done tons of podcasts and I've done radio. I had a radio program for 2 years.
I remember you saying something about that. What was the radio program about?
That was I did the News Talk breakfast show. So it was a daily breakfast breakfast show that we went out to the whole country.
Oh
wow! I had guests on. I talked about what was going on in the economy.
What channel was that on?
News Talk. It's the biggest. It's probably the biggest independent channel in Ireland.
Wow. Okay. Fantastic.
So it was like after RT1 and RT2.
Okay, so this kind of thing's easy for you.
I've done it before. I'm not anxious.
Good.
I won't leave you hanging.
No, I'm certain you'll handle yourself perfectly fine. So, obviously, what we're talking about here today is startups, obviously being the area that both of us work in, and what I'm kind of interested to kind of get into really is first of all kind of your background, where the what you've done, what you've been through, the things that you've seen along that journey, and really just kind of helping to kind of lay out the experience that you've had for people who might not know.
Yeah. Well, first of all, thanks for having me on. I think I've been in the business about I've been in financial services for about 42 years, which seems a very long time, but I've seen a fair bit come and go during that time. I worked right up until about 20 years ago for various broking firms and banks. I finished up with Goldman Sachs in their syndication department. So I saw some really big deals and some smaller deals. I then left and then became an entrepreneur and started my own startup, which was a broking firm, which we built up and sold very successfully to E-Trade. I then bought back a business from E-Trade, which was a funds business, and I built that up from about $25 million in assets to just over $1 billion, and we sold that. And then I started a business called Check Risk, which was essentially looking at risk modeling for financial services across the board for banks, insurance companies, and the rest. And I'm in the process of selling that. And about a little while ago, and as part of that business, both at E-Trade, I ran their corporate finance department for E-Trade Europe for a number of years, and then left and started Check Risk and carried on doing corporate finance throughout that period. And then more recently set up Dog Fox Consulting just because I was getting inundated with requests. And so that's kind of the progression. I've always been interested in startups, new businesses, and trying to help people understand how to access money, funding, what form of funding you might need, and then so that's the deal, and then obviously place it with clients that I've met.
It's quite a journey. So when you say been doing it for 42 years, it makes me feel quite young in that I haven't even been around that long yet. So it's quite nice in that front.
The market has changed, and it's okay. I mean, I think but I had experience. I worked in Japan for a while. I worked in the US. I worked in the UK. I remember the days when on the London Stock Exchange, you were a blue button and then individual member of the exchange. And you used to go out and get prices by going up to ask somebody for a price. And obviously none of that exists. This has been tons and tons and changed during that period. But what hasn't changed is how you go about raising money. You still have to go, it might be slightly more sophisticated than it was. But essentially that really hasn't changed in 40 years. It's all about getting your numbers right and knowing the right people to go and speak.
And knowing how to put it in front of those right people, that pitch effectively in terms of how you present it to those right people.
Yeah, because essentially you've got to imagine nowadays VCs, private equity firms, high net worth individuals, family offices, they probably get 3 or 4, 5, 6 pitches a day. And so you've got to make yours stand out. You've got to tick the boxes to make sure that the person reading it has those boxes ticked. Otherwise, it just won't get past the door. It doesn't matter what you or I might say, this being the best deal since sliced bread, because every single person thinks they have the best deal.
Yes.
So you've got to get around that kind of that hubris and just make sure that when you go in, you've got everything lined up, that everything makes sense, and you've got to be meticulously honest, and you've got to be patient, because it takes VCs and private equity and high net worth a little bit of time to make their decisions
and I suppose work their way through all the other bits that they're getting put in front of them as well, and pick the ones that they want to look at in more detail.
Yeah, you sort of get an indication that things are moving along when people want to sign non-disclosure agreements, NDAs.
Yeah.
Because then they get access to what's called a virtual data room, VDR, and they see all of the guts of the operation of the company that's trying to raise money. Until that stage, you haven't hooked anything, and even at that stage, all they're doing is showing you that they're doing due diligence. And then there's a discussion usually about pricing and about the numbers and how the numbers stack up and what your business prospects are. And that's where it really does boil down to getting the right metric to make sure that you haven't overvalued your business and also
undervalued.
or undervalued. And we have come across, as recently, a company that looked pretty undervalued. And so there's quite a lot of work for entailed in terms of getting a company ready to even send out a pitch deck that's going to be the diamond in the rough. And there are certain formats that people look for, they want to know, what your business idea is, if there's any, what stage you're at. Are you pre-seed? Are you seed or startup? So there's a lot of stuff that's got to be, you've got to slot it in the right place.
Yes.
Otherwise, you just spend hours knocking on the wrong door.
Yes, exactly. Yeah, yes, and I know it's interesting that you mentioned about sort of becoming an entrepreneur yourself and always being interested in that space. I mean, is there anything in particular about that sort of side of things that and startups and so on that attracts you over and above anything else? Is there a key thing that you can put your finger on?
Yeah, definitely. I think I would always rather have been and have been at the front end of a startup than the person that takes over and takes it to the next stage. Because most entrepreneurs are great at starting their business, getting it to a certain size, and then appalling at delegating. They don't necessarily bring the management team at the right time to back them up. So, and that's a very difficult thing to do. And we can talk about that on another podcast, but letting go of the business and allowing it to grow is a real challenge.
Yeah.
But at the stage where we're at, the reason I'm attracted to it is because I love new ideas. I love innovation. And I love the challenge of getting a good business idea to fruition.
Making
that's
it become
what excites me. I think it's the same for you, Alex.
Yes, it's really the joy of making an idea become more than an idea. I mean, I often use the analogy that ideas are really, they're things. They're something else in themselves. They're not just the random rattlings in the heads of a person. Every single thing that we see around us every single day was started life as an idea inside someone's head.
There's some classic examples of that. Cat's eyes in the road. Everyone looks at that. Someone had a patent on those and made billions.
Exactly.
So you just think, oh my God, that's extraordinary. How do you, but of course, before then, people didn't have a center of the road.
No. and if you're driving at night, very hard to see where the edge of the road was.
Yeah, exactly. Very hard. I mean, I actually remember that. and falling into ditches and stuff. Not
Hopefully not too often.
not too often, yeah. But things like that, the humble biro,
yeah,
Scotch tape, Tetra Pak, one of the wealthiest families in basically it's a box that can hold liquids.
Yes.
Made from cardboard. But they made billions and billions. So I met on my journey, one of the guys I met was had invented a machine. He was an engineer that could scrunkle paper, that you could take brown paper and scrunkle it.
Okay.
And he would sell both the machines and the paper to Amazon. And if you open an Amazon box, there's all that
scrunkled all the scrunkled brown paper in that.
There is
his machine does that.
A machine does that, and it's worth a fortune.
I bet.
So I think you're absolutely right. Ideas are, there are lots of good ideas, and there are lots of, you can look at different businesses and think, well, that business is going to be a great business because it's disruptive. But not all businesses have to be disruptive. No. Some businesses can just be an improvement. And a lot of times, trying to invent a new market is a lot harder than just doing a better job in an existing market.
Improving on one that's already there is the way. Okay, I see what you mean. And I suppose, touching on that point though, I mean, we get it. We get a lot of people who we speak to have got very, very good ideas, and they come to us with great ideas, and we immediately look at the idea and go, you know what, that is something that could really be something. But the difficulty a lot of them face is having the finances to even get their idea from out of their head onto anything resembling a business. And I suppose that's the biggest challenge in any kind of startup space. And I suppose I'm interested to understand what you feel the answer there is, if indeed there is one.
I think it's just about being super organized. I mean, the problem I think with a lot of people who have ideas is they might be good engineers, they might be scientists, they might be, good at AI, artificial intelligence, or anything like that, but they're not necessarily good business people in terms of bringing an idea to fruition. And so you do need a team around you. And the only way you're going to get an idea to fruition is by sitting down and really working out what the numbers are. Does it actually stack up realistically?
Yeah.
Because ultimately you can sell a dream to an investor, but they won't invest on a dream. They'll invest on the financials. They'll invest on are they going to make money? And that's very different to having an idea. It's very different to coming up with that special thing that could be something enormous. There's a lot of your idea's got to be the right idea. It's got to be at the right time. It's got to be then financially sound. It's got to look as if it's going to survive. You've got to present it in a certain way that people have confidence in you delivering the project. There's no good having a great idea unless you can deliver on it. So and it's not just money that is the mechanism of delivery. Money helps, but being organized and setting realistic targets, being honest, those are the things that really make the difference.
Yes, and I would add to those that sort of tenacity and perseverance being two major elements of that as well. As a founder, you've got to kind of be prepared to just keep hitting your head against that brick wall sometimes and hope that eventually it will fall down. I
agree. I think tenacity is huge. I think the two big skill sets I've noticed in entrepreneurs, I think you're dead right, is tenacity in the chase, never let go. Just absolutely never let go. And then secondly, knowing when to let go.
Yes, exactly. Yeah, at a certain point, you get to the true definition of insanity, don't you? Doing the same thing over and over and expecting something to change.
The big thing in business is the way I define that, and it's a really good topic of conversation. I think, Alex, is having a business where you push on open doors. If you were I've run businesses where I was pushing on closed doors, and it's hell. It's miserable. You get up every morning and think, what am I doing? Why isn't this working?
Mm.
Of course, that's the real question, is why are the doors closed?
Yeah.
Why am I having difficulty? And I'm not talking, because I'm assuming here that everyone can identify the right person to speak to.
Well, not everybody can. I think a
Yeah.
lot of the challenge is it comes into people, especially people who are sort of startup entrepreneurs, founders, and so on, who are new to it, who have literally taken their first step out of a safe job or a corporate area or something like that, and they're stepping into entrepreneurship for the first time, and they genuinely don't know how to find the right person to speak to, and it is that obvious thing of you don't know what you don't know, do you? How do you how do you deal
well, I
with
think
that?
on the funding side, I'd agree with you 100%. That's right. But in terms of sales, or in terms of getting your product built, or whatever it is, I'm thinking more of product sales there. So if you're struggling to sell your product probably isn't that good, or isn't that relevant, or isn't, or you're trying the wrong person, or it's one of the, it's got to.
It's one of those things. Yeah.
The investor mindset has to be, why is this not working? And you know what? The worst entrepreneurs are the people that bullshit themselves.
Yeah.
There is zero room for self-bullshit. You have to be honest with yourself.
Yes.
As to whether this is working or it isn't. And if it isn't, what do I need to do to change it?
Yeah.
Because you're not going to get, and I've seen people do this, is that they've got a new widget or a new thing and they're selling it into an industry and it's just the wrong size. But it's the best thing since sliced bread, obviously, because it's theirs. And then people are saying, well, we can't, we're not going to change the whole industry to fit your product. Even if it's 10,000 times better, we're not going to do it.
No, you're fighting the industry from the wrong end there, aren't you?
You've got to go with the flow, and you've got to find the flow and then go. I don't know. So I think that's right. And then within the context of getting a good pitch deck together and the financials together, you have to have a feel for that. You have to be able to explain what the total available market is, what the likely available market is, what the other available markets are. This TAM, SAM, TOM, whatever. I always forget.
Whatever the acronym is these days. Yeah.
Yeah, exactly. Yeah. But you've got to know, you've really got to do some research. And I think that's the other thing we can kind of move on to is a lot of entrepreneurs have a great idea, but don't research if it's already been done.
Yeah.
And if it's being done, how can you do it better than the other person?
Yes.
Which is fine.
Or if the other person failed, why did they fail? I think that's a big one.
Yeah, a big one. Why did they fail? What is different about your product? Why is your, because we hatch plans around a kitchen table.
Yeah.
And, everyone is the smartest person in the room in a kitchen.
Yes. In their own kitchen, generally the smartest person in it. Yeah, exactly. Yes.
I don't mean that unkindly, because
I know what you mean. Yes.
But the real world is slightly different. So there's a lot of preparatory work, and I think coming back to kind of the subject matter that we were talking about before is have a good idea and then just prepare, just absolutely research the hell out of your subject.
Yes.
And make sure that you're right and that you're convinced.
Yeah. And
take every opportunity to convince yourself that you're not right.
Yes, it's victory loves preparation, as the saying goes, isn't it? And that's and I think that's something that is very important for a lot of people, because I mean I've met plenty of entrepreneurs who have got a great idea and what they want to do is sprint as fast as possible to getting it to market, because you must definitely have come across this as well, with the mindset of like, if we don't get this to market as soon as possible, someone else will. And so they have this desperation to sprint to the finish line. What would you say to someone who's in that sort of mindset?
Well, it's going to be very difficult to raise money with that mindset, because VCs and private equity and investors don't have that mindset. They have the mindset that they want to do proper research and they want to make sure that they're not investing in a dud. So if you pressurize a VC, you'll lose them. Yeah, that's for certain. It's happened. I've done it before. If you really feel that you've got to get to market quicker than anyone else because someone else will, then you've got to question how good your product is going to be. What kind of moat, what kind of ring fence are you building around your project? Because it actually makes me very nervous if someone says that, because it makes me think, well, then what's to say this business is going to be successful?
Yes, because there's nothing setting it apart. Effectively, is what you're telling me. You're telling me that because someone else will come up with this, then it's not that difficult a thing. It's not that impressive a thing in real terms.
Moats, and we've talked about this before. Ring fencing. The moat in the classic sort of Warren Buffett terminology is a business that can protect its earnings either through data or through contracts or whatever it might be, or a patent, you protect your business from other competition and you make that moat as wide as possible and the walls as high as possible. So the barriers to entry are high. If you've got a business that can do that, you really do have a good chance of being a success. They're rare though, they're harder.
Yeah, they are rare. And I was just about to say there that I think the most difficult place to do that in the moment is where most startups are at the moment, which is in tech. Because in tech, it's very difficult to build a particularly wide moat, because all you can really do in terms of patenting and IP protection and so on is protect how your product does it. If someone else comes up with a way of doing the same thing by using a code going round a different way, then there's not really a lot you can do to stop them. And so that's that. How is that addressed, do you think, within the tech space?
I think the only way you can do that is to have the terminology of verticals and horizontals in the tech space. You have to know your vertical very, very well. So your vertical could be in footprints, or it could be in, whatever it is, whatever data, and you have to control the data. The data is remote. Yes. And if you've got the best data set, then you've got real value in your business. But if everyone can get hold of the data set, then it's just
you probably don't have anything that's that.
And you can't differentiate your product very easily, because it comes down to level of service, how quickly you respond, those types of things. But I mean, those are service issues rather than data issues.
Yes.
So I'd recommend. You're absolutely right. You've hit the nail on the head. I'd recommend anyone in a tech business to have a tech business where they know their vertical very, very well. That they somehow are the aggregator of data in that vertical, and then squeeze other people out.
Yes.
So we talked a little bit a while ago, I think, with one of the investors who had invested in a company that had got the data on every single kind of shoe footprint. In other words, what does a shoe, if it's put in mud, what footprint does it leave? And they sold those to the police forces so that the police could identify what kind of shoe it was.
So if they find a footprint, they know what shoe the person was wearing, right?
Yeah. That's a great, again, a very simple idea. No one had thought about it, obviously, before. And they control the data because they collected it, and it made it absolutely useless for anyone else to collect because they've already got it, and they've already got the clients, and they're already
in tech businesses, when it comes to sort of sales within tech businesses, especially in most cases, the real value in them is their data, isn't it?
Yeah, I think that if you look at SaaS businesses, services as software, software as a service. I hate all these acronyms.
I know all these bloody acronyms. Don't worry about remembering them.
I know. But anyway, software as a service. Basically, if it's just a service, you'll get lots of competition. If you've got data, then you have product, and that's then you can sell the data, and it's actually really useful to people. I was involved with a company called Online Travel, which was one of the first online travel companies, and this was 30 years ago, and so they were raising funding. We raised funding for them, and they had a model where they could go direct into into the booking systems that were existent at that day, and they could book flights end to end. But they didn't have a moat because they didn't have any particular, they were just booking flights basically, or hotels. And then we listed that on the AIM market, the alternative investment market. And then eventually I was involved in the sale of that business to lastminute.com. So what was the difference between those two businesses? Why did online travel grow at this rate and Last Minute grow at that rate?
Yeah.
Well, Last Minute had properties that they were exclusively marketing for.
Yeah.
So they were providing an end-to-end service. They got better rates, whereas online travel was just a processing business.
Yeah.
And now it was useful because the technology they developed in processing, lastminute.com was buying it for that. So
Right.
that essentially they got a processing part that was interesting for a fast-growing business.
Yes.
But the multiple that online travel got wasn't as high as it would have been had they had a big database or yeah.
Yeah, so it's important, isn't it, to look at what underpins the value in a business. I think that's where if your ambition is ever to sell it or to get it into a strong market position where it doesn't end up in a massive amount of competition, because if you end up in the space where you are in a market where you've got lots of other competitors around you doing basically the same thing that you're doing, you effectively end up in a price war. And that's a quick march to the bottom, isn't it? It's
quick march to the bottom. Yeah. And the only way you can differentiate yourself is from marketing spend. And that's another quick way to the bottom.
Yeah, exactly.
So, so I don't want to put people off though. There are businesses out there, there are new ideas coming through that are revolutionary, that are innovative into existing markets that
they really are.
Will transform things. I think artificial intelligence will transform knowledge. I think those things are absolutely clear and fundamental. But the thing is, what can look like a good idea can suddenly not look like such a good idea when you put it under scrutiny. So, to come back to the original kind of theme, you've just got to have a good idea that stands up.
Yes. Yeah.
Because I worked with someone who always came up with ideas, but none of them were really work. And then occasionally he'd come up with one which was a really good idea because it could work.
Yeah.
So the point I've always made to people is, if you're an entrepreneur, great to come up with ideas, but then you need to have the mechanisms around you to make it happen. So it's no good just being an ideas person.
Yeah,
that's not good enough. It won't cut the mustard. What you've got to do is be a good ideas person and then have either the skill set yourself to actually put it in place,
or you've got to have the executors around you who can make those things come together. Yeah.
So again, you've absolutely hit the point, the nail on the head. It's just it's not just ideas, it's about execution.
Yeah.
And that's what a VC looks at.
Absolutely. On that note, obviously talking about investments and how people look at investing and so on. I've always been intrigued by some of the very big startups that people have heard about that have churned in absolutely loads and loads and loads of angel money and VC money and so on, but have never turned a profit. A great example being Uber. They still have running investment rounds and still getting people putting investment in. Explain for those of us who don't really understand that how that actually works, how that stacks up. Why do people still invest into that?
Well, I think it's called blue sky investing, and blue sky investing is because no one really knows where it's going to end up. So your valuations can be as high as you like because there's no real metric to measure it against. I saw that with E-Trade itself. I saw it with a lot of the original .com kind of companies. The problem is, how do they do that? They do it because they do have revenue. So for day one they raised a small amount, they grew, they got some revenues in, and then they believe that the way to get to where they need to do is to capture more market share. And so you raise more money to capture market share. It's called land and expand, and you land and you expand, and your investors know that it's going to be a blue sky investment until such time as
you've hit such a sizable market cap that you get the returns back as a result. Is that effective?
Yeah, that's it. Either through dividends or through whatever it is. But there's a big problem with it, because ultimately companies, AOL was a classic example of this, which is one of the original internet providers, is that they had a market cap. AOL were buying, I can't remember who they're buying now, but the AOL market cap had grown so quickly, and the projections were so vast that people were saying that it was going to be larger than the US economy within 4 years. And of course, that's just,
it's crazy.
So they ended up buying something like Disney, or I can't remember who they actually bought.
I think, did they buy Time Warner or someone like that?
Yeah, they bought Time Warner. You're absolutely right.
Yeah, they did. Yeah, I think they bought MySpace as well, didn't they?
Yeah. So Time Warner comes in, and then suddenly investors can see real numbers and look at the valuation and say, well, this just does not stack up.
Yes.
The worst thing a blue sky company can do is to buy. And they used the terms they used to use, and this is true, Alex, with terrestrial businesses.
Right.
So if you were non-internet, non-kind of tech, you were terrestrial.
Right.
If you weren't, you were non-terrestrial, or you were, whatever they wanted to call themselves. But the point was, terrestrial businesses actually make money.
Yeah.
These other
blue sky ones don't really. They just keep. Yeah.
Well, there was, the dot-com boom came to a shuddering end.
Yes, I remember.
And a lot of these businesses went out of business, and I'd suggest that any business that thinks that it can exist in perpetuity can't. It won't unless they turn a profit.
Yeah.
And the Uber valuation, when people realize that, will come crashing down.
Yes. Well, I'm waiting for that particular bubble to burst, because it happened with WeWorks, didn't it? WeWorks bubble burst not that long ago, and they were another one very, very similar to Uber, and they got loads of money plowed in. They expanded really quickly, and then suddenly realized the whole model was completely unsustainable, and the whole bubble burst, and down they went. And I can only imagine that something like that is going to happen to the likes of someone like an Uber or something like that at some point.
Yes, but I think it's just not sensible. But the bigger the business gets, the more critical people are of the valuation. And I think that's a key thing, is that people can kind of, at the start of business, you can put a valuation on that's reasonable, obviously, but perhaps overvalued relative to what it is, because there's a lot of blue sky. Now, I'm very cautious about that. I try to value businesses at the right valuation.
Yeah.
And that can be an undervaluation, in other words, that some people have undervalued their business, or that they overvalue it. I try and get it to the right point.
Yeah.
But as the business gets bigger and bigger, you've got more and more people looking at the business and the revenue flows and the metrics around what generates revenue.
Yes.
And so a lot of companies, they raise a lot of money, and then post raising the money, the valuation falls, because they can't match the expectation.
Yes.
And so it's very important to recognize that matching the expectation, because once you've got investors, it's not just your baby. You've got a group of people that have trusted you.
Yes. Yeah. And you're beholden to them in some way now. Yeah.
Yeah, of course. It's a big change. And I think some entrepreneurs find that difficult. It's less difficult at a startup because you haven't got that many investors. But certainly as the business grows and you get more and more investors on the business changes.
Yeah.
Sorry, after you.
Yeah, I was going to say, I think that it's absolutely right, and I think a lot of the entrepreneurs that I work with, especially, they will often tell me how fearful they are of taking their first investors on. They've got this worry that the first investor that comes in is going to try and change everything they're doing, is going to try to stick spanners in works all over the place. Which you can understand when it's someone who, when you think of it in the terms of it's their baby, it's their idea, it's their thing, and they're trying to build it, and now they've got to bring another person in to help, or to get that money into the company. And there's always going to be that natural worry that the person that comes in is going to have different ideas about it than you are. How do you deal with entrepreneurs who ask those sort of questions?
Well, I think there are two things. I think the first thing is an investor is different to a board director. So if an investor is also a board director, then you're dealing with a board, and you've become chairman or chairperson of that board, and you're going to have to deal with a board. And that's and that's what boards are for. They're supposed to provide some kind of framework.
Yeah, like
I actually think they're
effectively.
It's a checks and balances, and it's a very good thing. And actually, the other thing is to say a lot of investors need to be engaged with because they have good ideas.
Yeah.
So if you're the sort of person that just thinks your idea is the only good idea, then that's an issue. But I think a lot of people are open enough to recognize that actually, if you get the right investors, they're going to help you. They're going to give you advice because they've done it before.
Yeah.
I suppose the next thing is, an investor is different to a board director. So if it's just an investor, a passive investor, then nothing changes.
Yeah.
But you do have obligations now to report to them accurately about what's happening. So that can be a change. You start having to get management reports every month done. You can't be late for them. Those kinds of things have really become relevant. So I think I like entrepreneurs who are open to people coming in either as investors or non-exec directors because it shows that they understand they don't know everything. And and you don't know everything. I mean, the businesses I've started, thank God I had some outside directors on it because I didn't know everything, and somebody would point out and say, "Well, have you thought of that?" And I hadn't because my head was in the sand. Working every day.
That's it.
Or whatever, and you get a different perspective. So I think there's nothing to be fearful of.
Yes, I think that's something that it's a natural reaction, especially from someone who's never gone into it before, especially from someone who's never dipped a toe in those waters. It is a frightening prospect that someone else might come in and start causing you problems. And unfortunately, everybody is at some point or another has heard the odd horror story of investors or VCs coming in and effectively squeezing the original founder or original owners out of the company and taking it off them. And so, and I think, although those situations are actually comparatively rare in real terms, they're invariably the ones that people remember.
I mean, I think they are pretty rare, and but they do occur, and you're right. I think what I'd add to that, Alex, is that a VC or a private equity or an investor, it's the last thing they want to do is to take over the business.
Yeah.
Because that's not what they're there for. They're there to invest in your business.
Yes. Yeah. They don't really want to take on the headache of having to run your business for you.
The only time they can really do that is when you have less than 50% controlling interest in the business.
Yes.
And you should never go below 50% and have it in the articles of association and the shareholder agreements that you have, that you remain chair of the board or you're the lead investor and that you have the casting vote as long as you have more than 50% of the shares.
Yeah.
In which case, no one can do anything to you. When you go below 50%, the business should be well established, have a track record, and you're the people that you're the person and your team are the people they want to support.
They want running it. Yeah.
In other words, they're not going to, so, but it's much better to have, and I have had this a couple of times. It's much better to earn 20% or 10% of a business that's worth a lot than 100% of a business that's worth nothing.
Yeah, exactly. Yeah.
The second thing I guess I would add to it is that a lot of entrepreneurs think, I'm going to build this business, I'm going to sell it, and then I'm going to do it again. But if you've not interacted with the investor community, no one knows you.
Yeah.
No one knows of your success. No one, you have no reference point for the next set of investors. So if I build XYZ company and it's really successful and I sell it for 20 million, so from zero startup to 20 million, it's hugely successful. I want to invest my money in a new business. If I've got no outside investors, it's actually really difficult because you have a track record, but no one really knows how you work. They don't know how you got there. They don't. Whereas if you've engaged with the investor community in another business, it's a great way, because then you start building a track record with them. They're more inclined to invest in your next idea because they know you're a winner.
They know they're backing a horse that's won some races before, rather than one that they've just been it's just been brought off the back of a trailer and showed to them.
Yeah, absolutely. And say, isn't this what that? No, but that's exactly the example. I think that's exactly right. Right, you want to back winners. You don't want to back one that someone says this is going to win because
absolutely.
I sold a horse the other week that won.
Exactly, that's it.
It's like,
and I think that I'm interested to kind of sort of lean down that road a little bit and kind of talk about the mentality that's required within there, because obviously we do a lot of our focus work on the mindset, focus of the entrepreneurs. We do a lot of work with them, helping them learn about themselves, get to know themselves better, get to work on themselves so that they can actually work on their business. Our philosophy is to look at it and say, unless you can improve yourself, you've got very little chance of improving a business that you're working in. You've got to be kind of looking at it those ways. And so we do quite a lot of that. And I know that you yourself, you're involved in the Wim Hof methodology, aren't you?
That's right.
And I know that therefore that kind of thing matters. But what would you say are the sort of the primary tenets of the right kind of person and the right kind of mindset for a winning founder?
Well, I think it's definitely someone who can take risk, because you and meaning taking risk doesn't mean taking the wrong risk. But isn't frightened of taking risks, because you may be putting up your house, you may be putting up or taking out an extra mortgage. The starting point is you have to be able to take a calculated risk, and feel comfortable with it. If that stresses you out completely, don't do it. It's not for you.
Because the pressure will eventually get you.
I mean, it's just because things go wrong. I have never seen a business actually produce. I've seen one business produce more than they forecast, but the vast majority are within 10 to 20% of what they forecast. And that's stressful, because you've got to justify where you are, why it's still worth, carrying on, all of those things. So you need someone who is resilient, and resilience can come through things like I'm a level 2 instructor there, and I love it. And resilience can come from taking care of yourself, in terms of mindfulness, meditation, ice baths, whatever it is that you do, exercise. It is about being fit, not just mentally fit, but physically fit, because it is quite stressful. And it sounds like we're trying to put people off, but it's a misnomer to think that you go from a 9 to 5 in an ordinary job, and that your startup is going to be 9 to 5. It's not. It's going to be 9 to 12 at night.
Yes.
8, I mean, it's going to be
sometimes 5 in the morning till 12 at night.
Yes. And look, I got up. I was working at 6 a.m. this morning, and I will not be finished until 6 p.m. tonight.
I've
been doing this, so. Now, useful hours is really important, so you're not just sitting there twiddling your thumbs, but I don't think most people, people sort of think, oh, I'm going to have much more free time, I can kind of work when I want to. That's just not the case. If you want your business to be successful, it's 24/7 for at least 2 years. At least. I've never seen it.
Right in your head all the time, focusing on it, leaning into it, keep constantly running around your head, constantly thinking about the next thing you're going to do, and continually. I think that one of the things that I've noticed, and I've learned myself from setting my own businesses up, and obviously a much shorter amount of experience than yourself, but I think the main thing that I've learned for me is that it's about being able to look at your own decisions critically. and realize, okay, I fucked up there. That was
it's
me.
Definitely it's just not believing your own bullshit.
Mm.
And I think on experience, Alex, actually, I think it's the quality of experience that matters, not the longevity.
Yeah.
Well, you may have just as much experience as I do if the quality of your experience is you know what I mean.
I see what you mean.
Yeah. So I think my own, I think so. You need to have this steeliness, this determination, willing to work hard, self-honesty, and then tenacity. You just cannot give up. If you've got a good idea, you've just got to keep on knocking on doors. And it reminds me a little of, who would have believed that the Harry Potter books would have taken off? There she was writing them in a cafe. And sent them to lots of publishers, and lots of publishers turned that book down. Yeah,
exactly. I remember I can't remember which author it was, but I remember seeing a picture of one author a while ago, and in their office where they do their writing now, and they're a very, very successful author. They've got framed on the wall all of the rejection letters they ever got from all the publishers and all of the publishing agents they sent to that rejected them before they ever got their first book published. And so they've actually got them on the walls around their office to remind them to just keep going. And I think that's
very healthy.
It's a useful thing to do, isn't it? To be able to remind yourself that that's what it does take. It does take the dedication to it. You've got to be prepared that this isn't going to be a quick win. This isn't going to be a millionaire. This time next year we'll be millionaires, Rodney. It's not that thing.
Well, I think you've hit on a very good point there. If you start a business because you want to become a millionaire or a multimillionaire, that's probably the wrong motivation. What you need to start a business because you really believe in the product and because you think it is the most extraordinary thing and you're going to prove it.
Or something about what it does matters to you personally. I think.
And the money will follow. If you've got a good idea and it works, the money will follow. But kind of doing something for money. I know that sounds a bit perverse given that we're in financial services, but doing it purely because you want to make money often leads to disaster. Whereas if you do something because it really matters to you, as you said, you're much more likely to convince others, and you're much more likely to get it right.
Well, you've got to believe in it. So I think I was in sales for a part of my career which I don't particularly enjoy looking back on, but technically ever since I started my own business I was in sales. But when I was in the early days of sales, I was selling products that I didn't have any belief in. And no matter how hard you try, if you don't really believe in the product you're selling, it's very difficult to get anyone to buy it.
Very difficult. I think people spotted a mile off.
And
even worse if they think you're trying to make money out of them.
Yes. If they think you're trying to sell them something just so that you get paid, not because the thing that you're selling them has got any value to them whatsoever, then I think people do see through that, and
people are very sensitive to it. They can pick it up. Because
I think there's particular mindsets.
Sorry,
I was going to say, I think there's particular mindsets in particular markets as well, because if you look at the way that you would sell in, say, the UK, as opposed to the way you would sell in, say, the US, for example, it's very different. Most people in the UK enter a sales negotiation of someone who's selling something to them from the point of view is, I don't want whatever the shit this is you're trying to sell me. Most people have that immediate thought, whereas the American mindset tends to be a lot more, okay, show me why I want this. There tends to be a different kind of mindset with different sorts of people, and I think that's an important thing when you try to expand as a company into further markets, is understanding those markets and those mindsets in those markets.
Definitely. And I think, we've kind of gone back to that idea of open or closed doors. If you're pushing a door where, the best kind of idea is somewhere, the product where people call you and say, oh, I've heard about this, can we have a chat? Not, you're my 600th door that I've knocked on.
And I'm about to give up.
I was watching the program on McDonald's the other day, and the guy who took McDonald's forward basically was selling selling machines for, that made the whole process of making milkshakes.
Oh yes, yes. I remember seeing the film Ray Kroc. It's the founder.
Yeah,
It's
exactly. Fantastic,
brilliant film. Yeah.
Yeah, it is a very, very well put together film. He doesn't come across, he doesn't come across as a very nice man.
No.
But he, he took a good idea and made it into a great one.
Yeah.
And so I think entrepreneurs go through lots of stages. The very few entrepreneurs that survive the full course of their business. In fact, very few I can think of. I think a few, at Apple, but then and perhaps Microsoft, were there from the start right through to the end. But usually what happens is an entrepreneur, either the business gets sold to a much bigger business, and then the entrepreneur cannot work for that entity, which I definitely couldn't. I sold a business to E-Trade, and we had a 2-year contract. I couldn't wait to get out of it.
Yeah. I think it's part of the entrepreneurial mindset, because I know it's certainly mine, that I'm not cut out to work for someone. I have to be. I have to work kind of for myself. I have to work in a way that fits with how I want to do things and how I want to approach things and how my mindset works and so on. And I think that entrepreneurs, especially the creative kind of people, that's something that pretty much all of them will kind of understand, because I think that naturally you need that freedom as a creative person, as someone with creative ideas and their drive. You need that freedom.
Yeah, no, I definitely share that view. I think that you go from being employable to becoming unemployable.
Yes.
And I think that's the way you know what I mean?
Yeah.
And and so when you leave a job to start your own business, I think there's a rather romantic idea. Well, if everything goes wrong, I'll go back to doing that. But actually, that's impossible.
Yes, exactly. Yeah, I did the same thing when I started my first business. I stepped out from. I was running the sales and marketing division for a large website and app company which worked in the property sector. They were being bought out by Zoopla. And I didn't have any particular desire to work for Zoopla, and so I decided to go and step out and do my own thing, and I set my own business up there. And I kind of had it in the back of my head that, oh well, if this doesn't work out, I know I can go and do that again. And I kind of had that in my own head. And 5 years down the line, I ended up having to shoot that business in the head because of falling it out with a business partner I was in and all the other bits and pieces, but not for a single heartbeat did I think about going back and getting another normal job again. I literally went, well, in that case, I'm just going to kill that one, start a new one, and that's exactly what I did.
And I think that's coming on to that point, because what you made another point there, which is really interesting, is fear of failure.
Yeah,
it's okay to fail. You're going to fail in certain areas. Things are going to go wrong. The famous anecdote: what could possibly go wrong? Well, a lot.
Yeah.
And that's okay. It's absolutely okay. I think the worst mistake as an entrepreneur or someone who's starting a business is to make a mistake and try and cover it up.
Yes.
Because that's the death knell. If you come up and say, I screwed up and we know what to do about this, it's not terminal and we can do something else, then people will really recognize that and the integrity behind that. And you couldn't set a single successful person up and ask them the question, have you ever made any mistakes? And if they say no, they're lying.
Exactly. Well, any successful person who's honest, and at least anyway. And I think I heard someone saying something the other day, and I can't remember who it was. It might have been on another podcast I was watching, but the guy was saying basically, I learned nothing from success. He said,
I think that's
I only learned from my failures.
Yes, I think success teaches you to get lazy. And fat. You know what I mean? It teaches you to get lazy and fat and spend money on things. Look, a classic example. I was a president of a company that I was one of the founders of. Great partners. We did terrifically well, and we had one line of business that was turning over it was literally about 120 million, 130 million, and all of us as partners thought, you know what? this is risky. We've got everything in, all our eggs in one basket. And we were thinking perhaps we should diversify. So we diversified into three other business lines. Not one of those other three businesses really worked. I, in fact, bought one of them back from E-Trade, for a penny. Literally, it was nothing.
Yeah.
And the reason they didn't work is because all they do is they distract you from what you do really well.
Yeah.
They don't act as diversifiers. They act as drains of time.
Yes.
And so, just do what you do well.
Yeah.
And don't get distracted. Don't look at the next shiny thing.
Yes.
And if you're really, really worried that your business margins won't hold up or you're going to get put out of business, sell it.
Yes.
Without all these other loss-making bits of crap in the background, just sell the good business before it goes. You're the best person to know when to sell your business.
Because I think that's something that you do know on a psychological level, not necessarily before you actually know on a conscious level. I sold my business last year because I'd been running it for 4 years. It was okay. It was plodding along. It was doing what it needed to do, but my heart wasn't in it. I knew that it was never going to achieve the things I wanted it to achieve, really. But it probably took me 6 or 7 months to even come to terms with admitting that to myself. And actually, I think the eureka moment of that was when I was sat down one evening with my wife, and I said, this business is just stressing me out, and I don't, it's not working. I can't. There was 2 people who were working in it for me, and I'd have been asking them to kind of take the reins and get on with it and take it from me and so on. And it just wasn't happening. And so I sort of said, what could I feel like I've got to walk away from it, but if I walk away from it, then the income's gone. What do I do here? And it was, we were just talking that back and forth, and suddenly, out of absolutely nowhere, this little thing dropped in my head of a conversation I'd had with someone about 3 years before, who said to me, "Oh, I quite like that. It'll fit into my business. If you're ever thinking about selling it, give me a call." And I'd completely forgotten about that until in the middle of this conversation, it popped into my head, and that it suddenly switched on the light bulb. That's what I do. I sell it, and so. I made 3 phone calls the following day and had 2 offers by the end of the week and sold it by the end of the month. It was literally just done. I'm quite a strong decision maker in that sense. Once I decide to make a decision, I just go with it. And I know that stood me in good stead, but I know that it's tough for the newer entrepreneurs to get into that and get into that mindset.
Yeah, I think that it's really important to remain completely focused. You know what I mean? Just stay completely focused on what you're doing, and not to get distracted. If you've had a good idea, just get it done.
It's very easy, I know, because I personally know I suffer from the what I call, like, the embarrassment of ideas kind of thing. There's constantly new ideas that I've got going on, and there's a big part of my brain which wants me to just go and make the next one, go and do the next. That's a new one. Go and write that one down, find a way to make that one work as well. And I think the entrepreneurial types are very much kind of under that same feel, aren't they? And I think a lot of them suffer from that.
I think when we look at it from our side of the table, as consultants and people that are raising money, I must have worked with over 1,000 businesses in my life now, well over 1,000, and very few of them, that's in terms of 1,000 bringing them to market. That's probably out of 5,000 or 6,000, and the 5,000 or 6,000 didn't work. They were never going to work. And so, it's really a culling process. And what I find entrepreneurs, I've never met an entrepreneur that comes in and says, I'm not sure about this idea. It's always, this is the best idea that's ever been invented. So it's a question of being a bit like a traffic controller and trying to work out, which aren't.
Yeah.
But what I would say is, if you are a successful entrepreneur, and I don't necessarily mean making millions and millions, but I mean you're a successful entrepreneur and that you build something from scratch, you take it to a logical conclusion or keep running it, and it keeps you in business, in life. That's the best feeling you can ever have.
Yeah.
And I would strongly recommend anyone to do it that has the right kind of mindset and the right approach, because you can do it.
And the desire. Yeah. Fantastic. Well, it seems to me like a perfect way to end. so
Alex, thank you as always.
Yeah,
and
thank you. Yeah, it's been
I
great.
hope it's been helpful. Great.
It has. It's been fantastic. I'm sure. I mean, I was thinking as we were going there that we could probably do one of these for 2 or 3 hours, and but obviously both of us have got things to be doing, so that's great.
Well, let's do it again.
We should.